The top three things in Keith's macro notebook are as follows this morning. The U.S. dollar, oil, 10-year yield. So the top thing in Keith's macro notebook, the U.S. dollar, finally a big move down in the yen versus U.S. dollar yesterday, and we're seeing follow through this morning to 119.71, which is a 4-week low. That's A, good for Japanese stocks, B, bad for oil, and C, very bad for oil-levered energy stocks. Second thing playing off of number one in Keith's macro notebook is oil. The beta on the correlation risk between U.S. dollar and oil continues to be massive. On a 0.2% positive move in the U.S. dollar index yesterday, oil and gas stocks were down 10 times that. And some of our least liked MLP stocks, which are obviously very highly levered equities, were down between 7 and 9%. This is a very different macro trade than the news year Greek thing. Lots to think about on different storytelling vectors here. And then the last thing in Keith's macro notebook this morning, U.S. 10-year yield. You had an expedited 3-day march higher in rates post the jobs reports. That finally stopped yesterday. Just a note, versus 5 a.m. yesterday, the 10-year yield is actually down a basis point to 1.98% this morning. And utilities, XLU, front ran that efficiently. Best S&P sector on the day as Utes were up 2.1% and are now trading, effectively like their tech beta. So those are the top three things in Keith's macro notebook.